A legendary billionaire is taking massive profits on literally the greatest tech trade of the decade, only to take that cash and deploy it straight into an aerospace manufacturer plagued by seemingly endless crises. You are looking at the central tension of David Tepper's latest Q2 2026 13F filing. So why exactly is one of Wall Street's most successful and ruthless opportunists cashing in his AI chips to buy Boeing?
Look, we have to dive straight into this jarring disconnect. Because on one hand, you have Micron Technology, a stock that has enjoyed a blistering multi-100% year-to-date rally fueled by the massive AI boom. And on the other hand, you've got Boeing, a company that's essentially trapped in a vortex of severe quality control crises, production caps, and just relentlessly negative headlines. Yet, the filing reveals a very specific proof point. Appaloosa management slashed its massive Micron stake by 41%, while simultaneously initiating a brand new $173 million bet on Boeing. It opens a massive curiosity gap. What exactly is Tepper signaling to the market right now? To actually decode this move, we've got to understand the man behind it. David Tepper doesn't just blindly follow the crowd. His historical playbook is deeply, inherently contrarian. Remember 2009? When the world thought the entire financial system was collapsing and everyone was fleeing for the exits? Tepper made billions by aggressively buying distressed bank stocks. The guy profits when things look bleakest. He looks for situations where pure market panic has created extreme mispricings, operating on the philosophy that sometimes the worse things get, the better the actual opportunity becomes.
That specific investing style is called event-driven distressed value. Now, to be clear, Tepper is not out there buying terminally broken junk companies. He is meticulously searching for fundamentally sound businesses, often structural monopolies, or in Boeing's case, an irreplaceable global duopoly that are currently experiencing peak market pessimism and a temporary, albeit severe, dislocation. He waits in the weeds for the exact moment when the risk-to-reward ratio becomes heavily skewed in his favor. And the scale at which he executes this strategy? It's massive. Appaloosa's disclosed Q2 2026 equity portfolio stands at roughly $7.47 billion. But it's not just the sheer size that's important to note here, it's the focus. During this quarter, Tepper actually compressed his long positions, tightening the entire portfolio from 39 holdings down to just 27 names. He is actively de-risking the long tail of his portfolio and concentrating his capital.
And this chart brilliantly illustrates that extreme focus. A staggering 78.9% of his entire $7.47 billion portfolio is concentrated in just his top 10 holdings. Tepper manages a high-conviction portfolio. This visually demonstrates that when Appaloosa shifts massive amounts of capital out of AI hardware and into distressed cyclicals, it is a definitive high-conviction strategic signal. This isn't just some routine passive portfolio rebalancing.
So let's talk about that AI hardware trim. The filing shows Tepper executed a massive 41% reduction in Micron, which, frankly, had been one of his biggest winners. But it goes even further than that. He completely exited his positions in SanDisk and Corning. By executing these highly specific semiconductor trims, Tepper may be suggesting that the capital-intensive hardware supply phase of the AI cycle is taking a pause. The market might be entering an AI hardware digestion phase, where valuations have simply run too hot and the easy money on the physical chips has already been made. Now, what's really fascinating is where that harvested capital actually went. Because it didn't just sit in cash. It flowed relentlessly into what we call the platform layer. Amazon is now Appaloosa's absolute anchor, commanding nearly 16% of the portfolio after another major accumulation this quarter. Micron is second but shrinking, and Alphabet sits at roughly 8.75%. Tepper appears to be betting heavily that the ultimate winners of the artificial intelligence cycle are the scaled networks, the massive cloud ecosystems that will actually monetize all of this AI compute they've been buying up.
But he hasn't abandoned the physical infrastructure entirely. He's just shifted one layer deeper to the utility overlay. While he trimmed the chips, Tepper maintained his core allocations in independent power producers, specifically VistaCorp and NRG Energy. These positions indicate a structural play on the massive electrical grid power required to support physical data center computing demands. He's playing the energy reality of AI, not just the silicon.
Section 1. Decoding the distressed pivot. And that brings us to the central conflict of this explainer. We see the tech rotation, right? But how do we interpret the rest of the filing? Because to truly understand a super investor's 13F, we have to separate their deep strategic signals from their short-term trading noise. So here is a clear taxonomy to read this specific filing. On one side, we have structural shifts. These are multi-quarter foundational moves like the relentless Amazon build, the heavy Micron trim, and that brand new Boeing initiation. Then, on the other side, we have tactical trades, like his activity in American Airlines. Categorizing these moves helps us avoid misinterpreting short-term trades as long-term conviction bets.
The crucial point here is contrasting these two very specific moves. The new $173 million Boeing stake is a classic, textbook distressed asset play. Boeing has an insurmountable, irreplaceable duopoly moat. It fits Tepper's long-term philosophy absolutely perfectly. Conversely, his re-entry into American Airlines is fascinating. He completely sold out of his entire airline portfolio in Q1 to manage risk, only to rapidly buy back into American Airlines right away in Q2. That is a highly tactical, short-term trading posture, not a fundamental structural shift.
And honestly, that airline flip serves as the absolute perfect cautionary tale regarding the danger of copycatting 13F filings. Think about it. Retail investors who blindly copied Tepper selling American Airlines in Q1 would have been totally blindsided when he immediately bought it back just weeks later. 13Fs are delayed by up to 45 days. They are a snapshot of the past. They do not show shorts, cash, or the trades he made yesterday. If you try to just copy a billionaire's homework without knowing their exact time frame, you will get burned. And by the way, if you like deep, evidence-based investing breakdowns like this that actually separate the signal from the noise, make sure you're subscribed. Because the ultimate takeaway from any 13F isn't, what should I buy today? It's, how can I do my own independent research safely? You have to evaluate the underlying businesses yourself. And to do that, you need the right tools. All of the research behind this explainer was created using Flash by StockSentinel.ai. You can generate deep research reports exactly like this one for literally any public company in the world, completely free at flash.sentinel.ai. The core company research is free. Now, if you want an ongoing investing edge, Flash has a premium feature called Best Ideas Now. Every week, it services the highest conviction ideas across 3 investor styles: long-term compounders, hidden gems, and dividend hunters. Premium also includes Portfolio Watch to monitor your portfolio and flag important changes, and Insider IQ to track meaningful insider buying activity worldwide. You'll see a QR code in the bottom right of this video. Scan it to download the Flash app and try it yourself, or access Flash on the web at flash.sentinel.ai. Pricing is going up over time, but once you lock in your subscription, your price never increases.
Section 2. What retail investors should research next.
So instead of viewing Tepper's filing as a literal buy list, we need to use it as a launchpad for our own personal idea generation. He's effectively pointed a flashlight at specific sectors. Now it's our job to look closer. When evaluating a distressed turnaround like Boeing, here is a very clear framework you can use. Step 1. Identify exactly what the market is panicked about. In this case, it's quality control and regulatory caps. Step 2. Verify the underlying moat. Can the business fundamentally fail, or is it an irreplaceable duopoly? Step 3. Analyze the price context. Are you buying at a massive premium to what Tepper likely paid during the quarter? You always have to ask yourself, what must go right for this thesis to work, and what is the market fundamentally missing? Stepping back, Tepper's Q2 behavior offers a masterclass in broader investing lessons. First, we see patience in extreme concentration in his highest conviction ideas. Second, and perhaps hardest for retail investors, is the raw emotional discipline required to trim a massive winner like Micron when valuations run incredibly hot. It's really about managing valuation discipline over the long term, locking in those gains, and relentlessly separating your core structural signals from your short-term trading noise. So how do we grade this thesis moving forward? Well, in the next 13F filing, there are 2 key metrics we need to monitor. First, does the Boeing position grow? Right now, it's a $173 million starter stake. If he doubles down, it confirms a massive structural turnaround thesis. Second, does the AI hardware rotation accelerate? If he continues to slash semiconductor holdings across the board, it's a bright red flashing light for hardware valuations. Which leaves us with the ultimate macro question to resolve our curiosity gap. Is the AI hardware cycle truly pausing, or is it merely digesting its massive gains before the next leg up? Tepper is hedging his bets right now, monetizing his silicon wins to buy a distressed aerospace monopoly and doubling down on the software platforms that will run the future. If you want the full research, including the deeper framework behind this explainer, you can get it at flash.stocksentinel.ai. Until next time, do your own research, and I'll see you in the next one.
Check out Flash at flash.stocksentinel.ai to access free research and videos like this one for any company in the world.